Hello, Oracles. Today I wanted to go over some positive and negative catalysts that we could potentially see over the next 6 months that could both affect Tesla and the entire stock market. So these are things that we've talked about before, just kind of getting more data points that are coming in more recently that I wanted to share with you guys that kind of gives us a little bit more of a closer inclination as to what could potentially be going on. So we'll get into all of that in just a minute. All right, so first things first, looking at the charts, Tesla down about 0.75% today, closing under 250 at 249.70. We still continue to follow this downward channel here, getting closer to that 235 gap. So again, just paying attention to this. This is just kind of the downward trend that we have been on. We will see where we go from here. RSI is down to 42.85. If we are going to continue the trend we've been on all year long, where we're going to head down to that oversold range, we still have a bit of a ways to go. Now, looking at the Fibonacci sequence, I do not have it on here, but Alex did share that out with me as well. So thank you, Alex, for that. And the Fibonacci has the bottom hitting right around that 220 level. We have that gap down to 221.91. So we may very well pull down, putting all these pieces together, following this downward channel, following gaps, following the Fibonacci, and following the RSI to being oversold. That 221 gap might just get filled. Now, switching over to crypto really quick, and I know we don't usually talk about crypto, but some of the things that we're going to talk about today could signify that crypto could be a little bit of a hedge to get into. Thanks to Alex, I am now following Jesse Dow over on X. Highly recommend following him. He does a lot of great information. He follows China. I was contemplating jumping into maybe some yuan to do some hedge over there. He's got some detailed information that is not a good idea, but getting into crypto and Bitcoin might actually be it. And so he's been tracking this and, talking about getting over 30,000 again could be a very good sign to push us over 31,500. We did tap over 30,000 a little bit earlier today. So we're just keep on pushing up closer to that. So I'm really paying attention to Bitcoin as well. I don't have a huge holding in it. I have about 10% of my portfolio in cryptocurrency, but this is something he is playing strongly through the end of this year. But of course, that changes day to day, not financial advice. This is just what he's currently discussing at the moment. All right, so to start with some of the negative catalysts, and I want to finish on a positive note. So as Jesse tweets out here, if you think you don't need to hedge against the chance of war with China, you're living on Fantasy Island. As Bonnie Glasser posted, China hacked Japan's sensitive defense networks, officials say. So now, there's always tensions like this all around the world in many different scenarios. There's a lot of different things that are going on a lot closer than we may hear about ourselves. So whether this is actually potential getting us to the war or not, we don't know. Obviously, we know Ukraine and Russia are still at war over there. Who knows what's going to happen? There are tensions that have been building up in many places. So is this a signal that something worse could happen? Or is this just another normal occurrence that is going on out there? Again, we just have to wait and see, but it's just good to have these little pieces of information to let us know, hey, something could potentially happen here. Next on the list for negative catalysts is something that we have been discussing for a while. Unusual Whales posting out, breaking, US credit card debt has now passed $1 trillion. That is something, again, that, discussing a couple of things. One, student loan repayments do start kicking back in October. The interest on those starts kicking in September. So anyone who has not been paying off their student loans is going to have interest start accruing in September. They have to start paying again in October. A lot of these people may be ones that now have extremely high credit card debt. Now, all of a sudden, they're going to be having to pay off credit card debt and pay off student loans at the same time. Now, have we seen the economy going up the way it has been in a positive manner because people have been using credit? That could be causing a credit bubble. That's not something we want to see either. So maybe what breaks that camel's back is the student loan repayments coming in. All of a sudden, people can't pay off their credit card debts. They have to decide between student loans or credit card debts or something else altogether. Now, all of a sudden, let's say that they can pay both of them off. That's a great sign. However, that means that spending is going to get dropped significantly on anything that is not a necessary product for people to buy. And now, if that is the case, we could see a massive earnings recession coming across the board. This is where you end up seeing growth type stocks not doing as well, and you'll see more staple stocks doing well, similar to what we saw in 2022. This could be another potential scenario building up like this. Again, not saying it is going to happen, just something to keep on the radar. The next piece we have is CPI data that is going to be coming out this week. On Thursday, we're going to be getting the CPI data. Looks like the expectations are for inflation to be ticking up a little bit. Now, not a huge signal that this is a bad thing. However, this is what the Fed is looking at. The Fed saw very good numbers for June, but what are July numbers going to look like? What are August numbers going to look like? We're going to be getting both of those numbers before the next FOMC meeting. If we see inflation continuing to tick up, we might see the Fed raising rates one more time. Now, on the positive side of this, Andrew Davis posts, Philly Fed President Harker foresees no rate hikes ahead and a confident projection for a soft landing, no rate cuts in sight either. And shortly after that, Seth Golden posts, Harker again, we will probably start cutting rates sometime next year. That is the first Fed president to project a rate cut in current cycle. Now, just a reminder that Jerome Powell did come out and state that nearly all of the Fed members are foreseeing rates getting cut in 2024 at some point. So we might actually see 2 or 3 rate cuts coming in 2024. So that has been projected, but this is the first time one of the Fed presidents has come out and said, yes, within the next cycle of this, we could potentially see that. And Charlie Bolello posted out as of August 1st, the current market expectations for the path of the Fed funds rate. September 20th, on the next FOMC meeting, we will get a pause. November 1st, another pause. January 31st, pause. March 20th, pause. And then we will see a 25 basis point cut to 5 to 5.25% as of May 1st next year. We would see additional cuts to 4.18% by January 2025. Again, this goes back to Jerome Powell speaking about several rate cuts for next year. It all makes sense. That's what he has said, and that is what the market is pricing in. If that is the case, that is great bullish news. However, if we do see inflation ticking up a little bit and that core inflation being stickier, maybe the Fed does go up 25 basis points more. If that ends up happening, we could see some ugly movements in the market. Now, with the Fed cutting rates next year, they do foresee a soft landing coming. And of course, as of right now, we're foreseeing this happening in May. Historically, we have seen the Fed cutting rates because something has triggered the need to cut the rates as they were. So right now, they're figuring they're going to be doing it because inflation is going to be in line. However, if we get these credit card debts going up even higher, we get student loan payments coming out, we get deflationary pressures kicking in stronger than they already are, we might see the Fed getting to a point where they might have to pivot earlier. That might not be a good sign for the market. Could be fine because that may mean that we could hit the bottom sooner and come back up, but it could also be ugly in the meantime. Don't forget, there's still a lot of zombie companies out there that need to get flushed out by having higher interest rates. The Fed wants to keep interest rates high for an extended period of time to get things to rebalance. That's going to take some time. This is why if they decided that this pause is going to be it, they're basically going to stay flat on these rates for almost the next year before they start to cut them. We still have yet to feel the effects of all of the rate hikes as well. That could still take some time. Don't forget the last rate hike that we had of 25 basis points was in June. It usually takes about 6 months for them to kick in. So we would not feel the final effects of that until December. So there's still a lot of time of lag that goes on with all of these Fed rate hikes and cuts. So you need to pay attention to those with all of this other data that's coming in. Because if they do see this and the data starts piling up, but there's lagging data and it takes time for their rate movements to take effect, there could be a window of time where it could get pretty ugly until everything kind of settles. All right, now sliding over to the more positive side of things. Again, if the Fed does end up pulling off this soft landing, we may have already seen the bottom. Perhaps this all just completely balances out as it should. Those of you who have been protecting yourselves with some cash but still investing at the same time, much like myself, could be in a good situation. maybe we get to a situation where we're kind of kicking ourselves for saving that cash because we really truly didn't know when we thought maybe it was going to get worse. Again, none of this is financial advice. I just share with you guys what I do. But there's obviously a lot of different mentalities out there. We've got Jesse out there who is going to be hedging with some Bitcoin, some other type of cryptocurrency plays like Block, SoFi, Marathon, a lot of those other companies as well. He's doing that with. He does a lot of other things as well. So for me, I'm doing it with a cash play with my CDs and interest, a much more conservative manner of doing these things. That's how I do it. And for me, that's what I'm comfortable with. So if we do get that pullback, I have plenty of cash to take advantage of opportunities. If we don't get a pullback, hey, I'm just like, I can say confidently, yep, we are in a bull market again. Now I can go ahead and invest smartly in different places because I feel confident that we're going to be going up. Maybe I didn't buy at the bottom, but if we're going to be in a bull market for the next 8 to 10 years, I would still be buying near the bottom based upon that time frame. Other positive catalysts we have coming, we've got Tesla, Cybertruck, most likely going to be getting their delivery event announced maybe even this week. I was anticipating sometime in August, we were going to be getting the delivery event date set. So I'm guessing it's going to be sometime in late September, early October, and we would get that announcement very soon. That's an awesome positive catalyst. Dojo getting built and coming online. That's going to be another awesome catalyst because right now FSD is being held up by the lack of compute. That's where Dojo comes into play. That comes online by the end of the year. We get FSD now actually being able to get functional in version 12, which is the alpha version versus the beta version. That now really kind of opens up a lot of eyes as well. Now all of a sudden Tesla has this solved, and we're going to end up having a lot of other legacy automotive makers coming out and saying, hey, we're already working with you on the NACS for charging. We would also like to license FSD. That is massive. That is most likely coming. Based upon this information, we may see that happen within the next year. So that is an awesome positive catalyst. Now, another awesome positive catalyst is just Tesla continuing to grow the way they grow. They continue to move forward with all their production, deliveries, growth of revenue, growth of profits. Yes, they've been doing this in a very difficult year. We're seeing Rivian, we're seeing Lucid losing significant amounts of money on their vehicles. Ford and GM also losing a ton of money on their EVs as they produce them. Tesla is making tons of money on theirs instead. Now, we do see Rivian improving their profitability, so that's not a bad thing. We've also seen Lucid, so they are losing significant amounts of money, but they are improving. So if they can get through any difficult economic times that we go through ahead, they could come out on the other side of this relatively clean. And if they are, that's just going to enhance the ability of the EV revolution to go forward. That in turn is also going to be helping Tesla. That moves everything forward even more positively. And I do anticipate on the Q3 earnings, they are probably going to be announcing a buyback. Now, of course, this is just me speculating, but I do have a feeling that we're going to be hearing about a buyback coming in Q3. So we just heard about a buyback for Palantir yesterday. That was awesome, of $1 billion. I have a feeling Tesla may be doing the same thing come Q3. So that would be another awesome positive catalyst. So again, there's good and there's bad. As always, you guys need to do your own due diligence and research. Please share in the comments below any other positive or negative catalysts you see for either Tesla or the entire macro environment that we could also discuss on here as well, as far as trying to plan out your strategies for the next 6 to 12 months. Now, those of us who are going to be doing this long term, there have been a lot of discussions about TSLY. Is it actually taking away from shares of TSLA? There was a great video that was just put out about that as well. So if you guys are looking for something from a Tesla bull on the maybe negative side of TSLY, I will put a link to that in the comments below. Again, I like to look at all different sides of things and get all of the information that I possibly can and share it with you guys, because it's not about me trying to convince or tell you guys what you should or shouldn't do. I just want to provide you guys with as much information as I can so that you guys can make a better investing decision for yourself. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.